welcome to the Lowdown Mortgage Podcast, the show where we dive deep into the topics that directly impact the evolving originator. I'm your host, Connor Bartley. Bam! And joining me today is someone who's built her business around a very clear mission and a very bold promise, a house hacking specialist who helps buyers solve two of the biggest challenges in today's market: coming up with cash to buy and keeping monthly payments affordable. She's known for saying, "I help you buy a home for $1,000, and she's pairing that message with education, events, and really smart follow-up systems to scale her impact in 2026. Danielle Anderson, welcome to the Lowdown.
Thanks, Connor. Great to be here.
Absolutely. Well, I'm excited to have you here. I know we're going to have a great conversation and really give a lot of value to the audience that's listening, because you've approached the market in a unique way, and I think it's really smart what you're doing. And before we get into like the house hacking stuff, take us back a little bit. What were you consistently seeing with buyers that made you realize that the traditional path to home ownership wasn't really working for them anymore?
Well, I think you touched on it with the two intros. Monthly payment and how to get funds for closing are the two largest obstacles that first-time homebuyers have. So if we as industry professionals are able to handle those two objections in a way that educates clients of how it's possible, is how we get more homeowners into the game. So the first one is my monthly payment. I live in a very high cost area in Denver, Colorado. Our average home price has, gone up significantly, where in the Denver metro area, it's not uncommon for a $600,000 single family house starter home. And so when people are looking at what it costs to rent versus what it costs to buy, your monthly payment, if we're just looking at monthly payment, is more expensive on the buy side versus the rent side, which is where house hacking comes in, where if you lived upstairs, rented out a basement to either long-term roommates, or I have always been a house hacker that uses short-term rentals like Airbnb guests in my basement with a lock off to help subsidize that difference, then we're able to get more renters into home ownership. And I'm super passionate about it because if you look over the long-term trajectory of home ownership, your net worth is just so much more. Like, homeowners have 40 times the net worth of renters. And so sometimes it's just getting into that game of how do I make this work? And sometimes making it work is utilizing roommates for a few years or Airbnb guests.
Yeah, I love that. And as we were preparing for this podcast and we were just kind of talking and getting to know one another, you had one of the most compelling like taglines that I've ever heard. And I remember stopping you and said, like, say that again. And it was, I help you buy a home for $1,000. And in a market where the average first-time home buyer thinks they need tens of thousands of dollars, and what does that phrase really mean? And why does that really stop people like me in their track?
So I think it's a major misconception. Like, a lot of first-time home buyers still think that they need 20% down, which is totally like, if you're trying to get 20% down on a $600,000 home, it's going to take years. And in that time that you're trying to save money for that down payment, that home price keeps getting farther and farther out of reach. And so most areas, like I'm licensed in 8 different states, but primarily do business in Colorado, they have down payment assistance programs specifically for first-time home buyers and sometimes even repeat buyers, where their entire down payment can be covered by a down payment assistance program. And then one of the nice things about the 2025 and as we enter 2026 market is we're seeing a lot more seller concessions. And so sellers are paying for a lot of the closing costs. And so if we structure the offer in the right way, where the sellers are paying for all of the closing costs, you're pairing that with a down payment assistance program. You might even have cash, but you want to set up your Airbnb in your basement so your monthly payment's better. You may opt to use that program so that you can get into a home for $1,000 out of pocket, which in Colorado is the minimum down or minimum borrower contribution for our most popular down payment assistance program. And so it opens the door of like what's possible. I might not need $40,000 to get into a $600,000 house. I might be able to do this. Now, it's not for everybody. Some people, see that and they're like, oh, I want the lower monthly payment. I will put more down. But it closes that objection of I can't do it because I haven't saved enough to, it's definitely possible without any money, but I make money. So let's get a home earlier than I thought I could.
And so I guess let's pause real quick because before we go much deeper, some people might be listening to this and be going, what the heck is house hacking? They may not even fully understand the concept of it. So how do you explain it simply, and why is it becoming, I'm hearing it more and more. So why do you feel it's becoming just more relevant out there as affordability gets tight?
So I define house hacking as just buying a home that you make money off of. So whether that is like when I first started, when I bought my first house, I house hacked with two long-term roommates. So I lived in the master, they lived in the two extra bedrooms. They paid me like $900 a month in rent. That helped subsidize my mortgage payment. And then Airbnb became a thing, and my sister started doing it with her loft, and it was like paying her mortgage, and she was making way more money off of these short-term tenants than the long-term roommates. And so I was like, oh, I'm going to try that out. So it could just be having, I call it a sneaky duplex. So in Denver, we have basements, and the upstairs is where I always lived. And then the basement, I put in a barn door. It was completely locked off with a key. The client or the tenants would enter in through the backyard, go directly downstairs. They had a little mini kitchenette. Think hotel room. You don't need a full kitchen in your house hack if you're going to do long term or short term um, uh, tenants. And they like I would just have on average 2 night stays. They would pretty much just buy a bed, and I would live upstairs, they would live downstairs. It was completely separate. So that would be a type of house hacking. Now that I'm 37, I don't want guests in my house all the time. So I just rent out my house when I'm gone. When I, go to Telluride for a week and go on a ski trip, I can lock my bedroom and bathroom and just rent out the extra bedrooms. So what I love about house hacking is that it can ebb and flow with where you're at in your life. If you're a 20-year-old and you're used to living with roommates, and instead of paying rent, you're like, hey, let's have my friends pay me rent. That's a form. If you don't want people all the time because you want a guest bedroom for your mom and dad to come visit, well, you might do short-term rental house hacking and just, rent it out every now and then. So it can ebb and flow as your lifestyle changes, but essentially just how, a way to make money off of your home is house hacking.
Yeah. And what I really love about this topic, because I started to dig into it and do a little research. And what I found was some study or some statistic out there, mentioned that over half of millennials and Gen Z buyers, 55% millennial, 51% millennial in a survey, said that it was very or extremely important to them to be able to rent out a part of their house when they were considering the new home to buy. So clearly for younger generations and really the population that makes up most of the first time home buyers, this is a really important thing that they're factoring in. So I think you're onto something really smart here.
Yeah. Well, and I think that it gives you opportunity, right? So when you have your largest liability, right? A housing payment is your largest liability that you really ever have in your entire life. If you can take that largest liability and turn it into an asset that you can make money off of, it is life changing. If you lose your job, right? Like if something happens and you have this home that has the ability to make money because you bought it in a strategic way that you don't have to live with somebody right next to you, but you can open up your basement and make money off of. When you get that pink slip, it's life changing to be like, oh, at least I can, most of my mortgage is covered by the basement. I think about my mom, who is a retired teacher, who has an accessory dwelling unit on their property that they rent out, and then they can go afford to travel and vacation in Italy, right, on a teacher's retirement, where they probably wouldn't be able to afford that if they didn't have this home that is now a money making machine, right? So I think that house hacking not only allows you to afford the house that you're buying, but even later in life or when challenges happen, allows you to have this flexibility of making money off of a house to either keep it or to just enjoy the fun things that you want to do in life.
Yeah, absolutely. And so when you're speaking with a client, you're using tools like MBS Highway to show buyers the difference between renting and buying. And you walk them through like the long-term cost of renting versus owning, especially when there's rental income involved. What tends to be the biggest surprises in those conversations? What are people like going, wow, I had no idea?
So I think it's opening their eyes to 10 years from now. So when I do like when I use that MBS Highway rent versus buy scenario, we're looking at like, okay, if we bought versus rented, one, asking the question of, hey, Connor, in 5 years, you decide to move out of this place. How much money in net worth do you have from renting? And they're always like $0. I was like, yeah, you might get your security deposit back. If we take 5 years from now and we use historical average appreciation gain, not even like the high end, maybe sometimes even using just like a 2% appreciation, just so that people can see like even worse, like lower case scenario. Here's the net worth that you would have off your house. I think that number is eye opening of just looking at the difference of like, okay, if I keep renting for the next 5 to 10 years, I have literally $0 to my name on housing. But if I opt to make this choice, even if I'm not house hacking and it's just something that I'm curious about. Obviously, appreciation is not guaranteed, but if we're using historical averages, this is what your net worth would look like after owning, and you have that stability throughout the years that you're staying there.
Yeah. And so as you've worked with borrowers over the years and you've helped them into homes and go down this route or just a more traditional route, I'm sure you help people that way also. What are some of the moments that have stuck out to you? Are there any like borrowers that still resonate with you or that have just been memorable early on in your career?
I would say one comes to mind that wanted a monthly payment under $2,500. And in Colorado, buying a single family house with a monthly payment of under $2,500, if you're not putting a lot of money down, is just not really feasible, especially when interest rates are in the mid sixes. And so they weren't thinking about house hacking until they met with me. And I just started asking the questions. And this is what I teach agents to ask too is, are you willing to live with roommates? Yes, no, okay, yes, then that's a whole different conversation. No, maybe asking a follow-up question is, if I could find you a single family house that we could divide into two and you live upstairs and they live downstairs, would you be open to having short-term rental guests in your basement? Or if we found a house with an accessory dwelling unit, would that be? So they ended up purchasing a higher price point than they thought that they felt comfortable with, because they saw that like, oh my God, you're right. I can run a business essentially out of my home and have these short-term rental guests in my basement, and I live upstairs, and now my rent that I'm paying upstairs is actually less than I would pay in a one-bedroom apartment. That same client has since kept that house, turned it into a full-time house hack in a totally different way, where they're by the room rentals, turning it a 3-bedroom house into a 5-bedroom house, bought a new primary, and so is continuing this trajectory of just making money off of homes. And it just started with a conversation of like, hey, this is your goal. Your goal is to make or pay less than 2,500. This is what house costs. Here's a way that I've done it. Let me show you. And then he kind of like rinsed and repeated and then continued to evolve it.
Well, what I love about that story, happy ending. I love that they're making money off of other things, but I like what you did there in that to get better answers, you knew you needed to ask better questions, and you educated your bar or your agents on, hey, here are some questions you should ask to open up these other possibilities. Let's see if they're open to it. Let's go down that path. Like, what was the reverse engineering like for you to get to that? Because a lot of people don't think that way. And so I'm just kind of curious how you arrived at that.
So I think a lot of it is I've been a house hacker since 2012. So for more than a decade, I have made money off of my house, and that's how I created wealth in housing, right? And then I think the other thing is that if we just look at a monthly payment and they want a monthly payment of 2,500 in a single family house, that client is dead right there, right? Like, we can't get a single family house and get a $2,500 monthly payment unless you have a $100,000 gift from mom and dad, right? And if you don't, how do we, like, there is a way. And I think the other thing that I like to say to first time home buyers is, what are you willing to sacrifice for your future self, right? I sacrificed, having my privacy of having, somebody, 2 roommates live with me to get started. Then, there is noise in the downstairs when I'm living upstairs, but I don't think that's any different from living in an apartment with hearing, noise from the upstairs, downstairs transfer. And now I'm, 13 years later in home ownership and have multiple houses and don't need roommates if I don't want them. So there's that client that is willing to sacrifice their privacy and do what I do. And like your statistics say, it's almost 50% of millennials that are open to the idea of house hacking. And millennials are our clients that are first time homebuyers right now. And so asking those questions. And then on the other side of the sacrifice is like, if you're not willing to sacrifice privacy, you might need to sacrifice geography. You might not be in downtown Denver. You might be in Aurora. You might be in a 1-bedroom condo instead of a 2. But during those years that you're sacrificing, you're building wealth for your future self so that you can put that larger down payment on your single family house in 10 years versus just throwing money away on rent for the last 10.
Yeah. Well, again, you bring up great points. I personally have a 17-year-old daughter. I've got a almost 16-year-old daughter. And I'm thinking for their future, and I see the cost of homes that keep going up, and I'm like, how in the world are they going to get out of college? Like, they're going to have to get some great kind of job out of college. But you also, you see that there's other possibilities out there, and that it can't happen, and you just got to kind of be creative, be willing to sacrifice. Nothing great comes from without a little sacrifice, right?
So. Yeah. Well, and I think of your college age, like they're going into college, right? So the first year they may live in the dorms just to like experience that life. But then a lot of people end up living outside in a house. And most of the time that 19-year-old is living with roommates. So what could you do as a parent to house hack to help your kid? You help co-sign with that college age kid. Now you have an investment property that you could put 5% down on. Your kid now becomes a landlord. They already know the roommates and you know that they're going to be living in it for 3 years. So they pick 4 of their friends to live with them. Now their friends are paying them rent. Their tuition on their rent is way less because they now own this house. And now 4 years, they're ready to graduate. They've got equity in this home that they could probably sell and put down a new home. And that's this. And I say, when you're buying a home, it's almost easier to buy it when you're younger than when you're 35. Because at 35, you don't want to live with roommates anymore. At 22, you're used to, and that's what you're going to be doing anyway. So why not have your friends pay you?
Yeah, love that. So switching gears a little bit to something more just tactical and in the business, you mentioned that when you're staying in touch with your clients, your database, the borrowers that you work with, you stay in touch with them for up to 6 years, and you're always looping the agent back in whenever they're ready. And why has that long-term mindset been so important? And how does that change the way you view the relationships from the beginning?
So I think a lot of lenders say, I want to be your lender for life, but they drop off, but then life gets busy. So I think one of the things that I like to try to do is always reach out on the year anniversary of when they purchased a home, just to see how things are going, if they're still in the right mortgage for them, whether it's a 2.75% interest rate. They might not have any plans to move at all because they like that monthly payment, but they might have also had 3 kids since COVID. And yes, they love their interest rate, but like they really need another 2 bedrooms in that house. And that is a value that I can provide back to my agents of staying in touch and saying, hey, Connor, just talk to so-and-so. Sounds like they're ready to move. I'm handing back their own lead 2 years later, just because historically I'm better at keeping in touch with my past clients than the agents are because of the systems and the follow through.
Yeah, that's great. That's huge value, right? And so in 2026, something that you mentioned to me as a goal was that you wanted to host 2 events every month, one for borrowers, one for partners. And I'm just curious, like, how do the events help you educate people at scale? And why do you think this is, a more effective strategy than maybe just like the one-on-one or one-off conversation?
I think there's a place for both. I think that you can't scale without doing information to the masses. So I think that that's why I like the webinar. One, it's an evergreen content. I can, email blast that out to my 1,000 past clients and they get a touch point of something educational and something that adds value. But I also think there's a home for that one-on-one coffee meeting. And right now I'm doing more Zoom meetings just to save drive time. And then the other meetings are usually in person at a brokerage on a topic. And I'm trying to really niche down of like, it's on house hacking. It's on how to buy a home for $1,000 because a lot of times agents don't even know what programs are out there. So they're like, oh, really? What? And it's like, yeah, you and me work together. We write the offer strategically So the sellers are paying all closing costs and they're using a down payment assistance program. Obviously there's guidelines on like income limits and everything on, what that looks like, but majority of my buyers don't have an issue qualifying for that type of program. And then the other one that I do is how to get free leads on social, just because Instagram is somewhere that I get quite a bit of business off of. So teaching agents what I already know. So I think that there's a place for both. I think that hitting more offices with more people attending the trainings and their trainings set up by the brokerages, there's much more attendance on them versus me doing my own meeting and trying to get agents there. I usually go to the managing broker and say, hey, I help your agents get more buyers in 2026. And this is how I do it through house hacking and through down payment assistance programs. I will come and do a 30-minute training teaching them how it works. And then in response, a lot of time you create relationships with those agents that attended.
Yeah, you take that 30-minute meeting and turn that into 5 one-on-ones, right? And oh, that was really interesting. Tell me more. Great. Well, let's have coffee, and and then you start to build the relationship. So I think
that's exactly, you nailed it. It's like the meeting gets the introduction. After the meeting, taking everybody that attended or who didn't, then calling them for a one-on-one, whether that's a Zoom meeting or whether that's a coffee meeting, depending on what geographically they're located, is the entire strategy. And that's really how I've scaled my own business.
Super smart. And speaking of scaling, I know you were focused on like systems and diving into some new tools and building out some really cool things in 2026 for like automation and information gathering. How do you envision like systems for you in the future? And is that really going to be like, is that your main focus for the new year and how you're building?
Ooh, main focus. I guess yes, because I can't scale without systems is essentially what it comes down to. When you're doing 5 loans a month, like you can remember everybody and what they did and who their mom was and how much they're putting down and what program we put them in. But if you're at 15 loans a month or 25 loans a month, like you've got to have it dialed in, like, oh, this is what they wanted to do. And I open up a document and that's exactly what it is. Or if I'm having 3 different people on my team, anytime they open the file, they should know exactly what I did in the file. So I think that's super, super important. And then just efficiency on utilizing the technology available so that I'm very efficient with my time, so that I'm spending time doing more either lead generation activities or what adds value to a client, like a one-on-one personal advice, instead of doing the menial tasks that like somebody else could do.
Yeah, absolutely. And so as we wrap up, this is kind of a bonus question here, but if you were giving advice to a loan officer who really wanted to niche down into the house hacking topic, what's the first step that they should take towards that?
Ooh, the first thing that comes to mind, like especially if it's house hacking, is you got to do it. I think like you need to like either buy a new house that you rent out, or if you can convert your basement into a rental, or be the house hacker like I am now that only has a keypad lock on the bedroom, right? So nobody's in my bedroom or my bathroom, but everything else looks like a hotel room in my house, and rent out your extra bedroom. And you might not have to do it forever, but do it to test it, I would say. Then start having I think if you didn't do that, the only thing that you would need to do is start asking the question, are you open to having roommates? If we could find a single family home that had a completely separate lock off unit, would you be open to making money off of your home? I think those 2 questions start a dialogue that you wouldn't have if you don't ask them. And that would be like the starting point, is just having you and your agents start asking the right questions to dig in, because I think it's like 87% of renters want to buy a home. So we have a product in our industry as a loan officer or as an agent that everybody wants, right? We don't have to sell why you want to buy a home. We have to sell or educate on how is it possible. And so I think taking that mindset and going, okay, I've got somebody that came to me, they called me, they filled out an intake form online, they Instagram messaged me, somehow I've got this lead that just wants to know, hey, Danielle, how is this possible for me? What steps do I need to take if I want my monthly payment this and I have this much to put down or total cash to close? And so if we can just dummy it down to making it simple, of like, hey, Connor, if you want to stay in Colorado, really a $500,000 house is nowhere near 2,500. But let me show you how I did it. And I did it by starting with roommates. Then I started changing it so I didn't live with roommates for the next 10 years because, or the other option is you got to move to Ohio, right? They're looking for an answer. Now, 50% of those people, that's not the answer that they want, but 50% of those people, it is. And now it opens a door of how it's possible. And that's what we as industry professionals have the opportunity to educate and show them how.
Yeah. Well, I love that you found a possible solution for people that are looking for answers, but they struggle with affordability, they struggle with how, and you're thinking outside of the box in a way that gives them an option.
Mm-hmm.
Not and that because really their only other option is what, wait a little while longer, save a little more money, and life happens, things come up, and that's so hard, and then you just sort of feel like it'll never be possible. But you're asking the right questions, you're walking the walk, talking the talk, and showing them, hey, this can happen for you. Let's go. Danielle, I just want to thank you for being on the lowdown, being a part of this conversation, and sharing just your wisdom and what you're doing in the market that's really working. And so, is there any final advice or anything that you'd like to share before we go?
I think the final advice for any loan officer or real estate agent is just really taking our job as it's our job to educate and show options. It's the client's job to decide what's best for them. And so if we can lead in that example, then we are going to help more people show how it's possible. And it might be 6 months from now, it might be a month from now, it might be 2 years from now. But if we can, like, I love the quote in our business, it's if it's not now, it's how. And just really creating that concrete path to homeownership. I'm so passionate because homeownership has changed my life and my wealth, and I think that if we're able to show why people know that they want it as well as how to get there, then we're just going to, benefit all of the renters out there and help them get into homeownership.
Well, thanks again for being a part of this. I'll be, keeping an eye on you and rooting you on. So I appreciate you. You have a great one.
Thank you, Connor. I appreciate it. Take care.